Well, hello everyone. This is Tim O'Keefe. I know this is an online course, but I wanted a chance to greet you somewhat personally anyway, and so I thought just a short YouTube video might be the way to do that. You noticed when the first shot was of this poster, and I was wondering how many of you understood what this poster had to say. Well, I can't see your hands. I'll assume that probably none of you did, though. And it is in Chinese, and it was actually written about me because I gave a talk in Shanghai to a group of business people, and these were the posters that were plastered around the university, that were on the university's television station advertising this talk, and I have no idea what they said. I'm assuming they said something pretty good about me, but you know, I don't know Chinese. I can't read that. I don't know what they said. And you know, when people look at a set of financial statements, a lot of them have that same reaction. They have no idea what the financial statements are saying. Well, you're a little bit different in that you're seniors or graduate students in accounting, so by now you have a good idea of what financial statements are telling you if they're done in English, and if they're done according to U.S. Generally Accepted Accounting Standards, or GAAP. But what about if you look at a set of financial statements that are in something other than U.S. GAAP? You might initially have that same kind of bewildered feeling. But as you look at it just a little bit more carefully, you'll find that there are many similarities to what we would see in a set of international financial statements compared to what we see in U.S. GAAP. And in fact, there are probably more similarities than there are differences, but those differences can really be significant, and particularly if you're not aware of what those differences can do in terms of the information that's trying to be communicated. Let me give you an example. Daimler-Benz, the parent company of Mercedes, and the company that bought and sold Chrysler over a period of about 10 years. It was the first German company to be listed on the New York Stock Exchange. They decided they wanted access to U.S. capital, and so in 1993 they decided to go through the process of getting listed on the New York Stock Exchange. Well, what that meant is that they had to file their financial statements with the SEC, the Securities and Exchange Commission. And what that meant is they had to have something in that filing called a Form 20-F. And what this Form 20-F does is it reconciles income reported under German GAAP to U.S. GAAP. So, you know, they start with the financial statements that Daimler-Benz would normally produce, which is German GAAP, and then they would translate that, they would reconcile that German computation of income to a U.S. GAAP computation of income. Well, Daimler-Benz had never experienced a loss year in its entire history of operation. But when that 20-F was prepared and filed with the SEC, suddenly a company that had a $600 million income had a $1.8 billion loss. And it was all because of the way in which we captured the information that was being reported and the way in which we were reporting it in terms of the accounting standards that we were using. German standards, they had an income. U.S. GAAP, they had a tremendous loss. Well, Daimler-Benz went on like that for a while, with that 20-F being reconciled from German GAAP. Then they finally decided, well, wait a second, we are really interested in the U.S. capital market more so than we are in the German market. So what we're going to do is we're going to change the way that we prepare our financial statements, and we're going to start using U.S. GAAP. So they changed completely. They gave up German GAAP and they started using U.S. GAAP. And so everything was fine. That led to the possibility of them buying Chrysler, which turned out to be not such a great deal. Then they turn around and sell Chrysler. Well, in the middle of all of that, they decided to change accounting standards again. So they went from U.S. GAAP to International Financial Reporting Standards. Okay, so this is the third set of accounting standards that they're using in a 10-year period. So think about it. If you're an analyst and you're trying to figure out what the heck is going on with this particular company on a historical basis, what do the trends look like, and they've got different accounting standards every time you turn around, it's going to be really difficult to understand what they're really trying to communicate to you. Well, something that another development that has taken place in terms of accounting standards now is that foreign companies who are registered with the SEC and who are seeking to have their shares listed on U.S. capital markets now no longer have to do that Form 20-F. So they no longer have to reconcile their financial statements to U.S. GAAP as long as they're using something called International Financial Reporting Standards. If they use International Financial Reporting Standards, they no longer have to do this reconciliation. Well, what that means, if I'm an investor and I'm looking at AkzoNobel, which is a Netherlands company, Royal Ahold, which is a British Netherlands company, if I'm looking at Daimler-Benz, a German company, if I'm looking at Carrefour, which is a French company, and they're using international financial accounting standards, then if I'm going to understand what they're trying to report to me, I have to have an understanding of international financial reporting standards, because they're no longer going to give me that reconciliation to GAAP. If I want a reconciliation to GAAP, I've got to do it. Now, the latest kind of development in that area is that the SEC has, in 2008, set forth a roadmap for actually requiring U.S. companies to use international financial reporting standards. Wow, so what does that mean to you? You've spent 4 years now, some of you are in your 5th year in accounting, you've been studying U.S. GAAP all this time, you're going to take the CPA exam, and the exam's going to be predominantly on U.S. GAAP if you hurry up and take it soon. But now we're going to change things on you. There's the possibility we're going to change things on you anyway. We're going to replace U.S. GAAP with International Financial Reporting Standards for those companies that are listed on stock exchanges and have to report to the SEC. So that could have some significant impact on you and your careers in accounting. So it would be useful to know a little bit about that. Well, in this course, as we go forward, we're going to talk about the comparison between U.S. GAAP and International Financial Reporting Standards. Why are they different? How are they different? How are they similar? What is the significance of the differences? How do those differences show up in financial statements? How might those differences impact decisions on people that are trying to use those financial statements? So we're going to talk about all of that. And then eventually what you're going to have to do in your teams is to prepare cases where you're actually looking at companies that are international companies and are reporting and using different generally accepted accounting principles. Well, I hope, I mean, it's too late to drop the course, so I'm afraid that you're invested now, and I hope you'll enjoy it, and I look forward to working with you as we explore international financial accounting. And I wish you success as you embark on this study, and perhaps I'll see you again in another video.